In the last episode, we talked about using VWAP and stacked moving averages to help determine a bias for the market. Today, let's look at two more ways. Hey everyone, I'm Jenks, this is The Trading Floor, and welcome to another episode of Back to Basics. We're expanding on the concept of starting with a bias before looking for entry triggers, and I've got a pair of indicators to show you that may help if you weren't a fan of VWAP and the EMA clouds. Let's start with an indicator called SMC Toolkit by us here at The Trading Floor. Let's open up the settings and rearrange some stuff. First, we're going to turn off the New York Midnight and 8:30 lines by clicking on Display, and then we're going to scroll down to Show High Wick and Show Low Wick and unclick those as well. In the Styles tab, let's turn off both sets of filtered fractals. Back on the Inputs tab, we're going to be focusing on the DR/IDR functions. DR stands for Defining Range, and it was popularized by a YouTuber called The Master a little while back. For now, let's just click on New York and leave the rest unchecked. In DR styles, you can change things to be whatever colors you want. I like making the actual DR and IDR lines very visible using just the solid and dashed lines, and the opening, closing, and mid lines can be dots, but you do you. Here's the idea. During each of these sessions, New York, Tokyo, and London, there's an hour's worth of trading that defines the range for the rest of that trading session. If a 5-minute candle closes outside of that defined range, there's over a 75% chance that the opposite side of the range will not be broken during the rest of that session. Let me show you an example. Once you have confirmation of a particular direction by having a 5-minute candle close outside of either the top or the bottom of the DR, you can go ahead and look for pullbacks to points of interest using the DR tool. This area between the DR and IDR lines is often a point of interest, and other times you can find the opening, closing, and middle lines providing support and resistance for retracements. Let's run through the concept one more time. We get confirmation of a bias when a 5-minute candle closes outside of the defining range. Then we want to take a position going in that same direction after a pullback to a point of interest or support and resistance. Your pullback and entry signal can happen on lower timeframes than the 5-minute, but actually procuring your bias, that initial confirmation, only exists on the 5-minute for this concept. Shameless plug, there's a pretty big group of people within our community that has found consistent success combining this DR bias concept with our Stairmaster indicator for entries. Let's move on to another indicator called the Outback RSI and Hull. This is another indicator that we developed here at the Trading Floor, and it was originally created to be a more manual way of trading the Outback indicator, which is an entry trigger indicator. The visuals on this tool can come off as a little hectic at first, but we're going to make it easier to read while explaining how it works. On the Styles tab here, I'm going to briefly turn off the entries to show you what the indicator is doing. When you turn off the entries, you're left with an RSI, and attached to it are a simple moving average and a Hull moving average. When the RSI moves from one side of the two moving averages to the other, it represents a shift in market momentum and will change colors for the entry options part of the indicator. Now, for actually using the indicator, I recommend flipping what we have selected. Let's turn off the RSI and moving averages and turn back on the entries. While we're at it, let's change the colors a little bit and make it the classic red for shorts and green for longs. Over here on the Inputs tab, you can experiment if you want, depending on what time frame you like to trade on, but the values I'm putting in right now are settings members in our community have found success with trading the 1 and 5-minute charts. Now with the settings closed, I like to minimize the amount of real estate the Outback indicator takes up, and it becomes as simple as remembering green for buys and red for sells. Once you've got your bias, you can go ahead and use any entry model you like to ride the momentum. If you need ideas for that, check out our video on easiest candlestick patterns.